There we go. All right, everybody. Thank you so much for joining us today. And I have the pleasure to interview a very good friend of mine who is a lender, has years and years and years of experience in the field, Mr. Habu. And then he's going to go over how to be ready, how to prepare yourself to purchase a home. As everybody know, the market is really hot right now, and the interest rates are fairly low. And it's only the best time for anybody to take advantage of that and go ahead and buy a house. But now, how do you prepare? How could you be ready for it? Do you have the right credit? Do you have enough income? What's the steps? How many companies should I reach out? He will be able to answer all these questions. So now I'm going to let himself introduce himself to all of you.
Hello, how are we doing today? And thanks for joining us. My name's Abu Jabi. I'm with A&P Lending. I've been in the mortgage business going on 16 years now. I've actually been with A&P Lending going on 8 years. We do all types of loans from VA, conventional, USDA loans. We also do investment loans as well. We do your traditional conventional loans as well, and we can close within 30 days from start to finish.
All right, so let's just go ahead and attack directly. So Abu, I will present you a few scenario, and then you can just let me know. So I'm right here. I just graduated from college, and I would like to buy a house. Is it possible, or do I need to wait 2 years of tax return in order for me to buy a house? Or I can use my years in college and with 1 year of work, to be able to qualify?
Yeah, that's a great question. And we run across that a lot in the mortgage business. Basically, if you're a graduate from college, you can definitely use your transcript as hours of employment. And once you go ahead and start working in a career in whatever job that you're in, we can definitely use that as far as getting you qualified to purchase a home. So we don't have to wait for you to be working for 2 years within the industry to be able to qualify. As soon as you graduate, as soon as you actually get that letter from your employer stating that you are hired with the company, we can use that letter and then also wait for your first paycheck stub to get the process started. So yeah, we can definitely help you.
Okay, great. But what about this, Abu? I'm self-employed. I'm sure you get that a lot. I'm self-employed. I work for myself. And can I qualify? And if I do, what's the minimum amount do I need to put in my tax return to make sure that, because when you're self-employed, you want to show the minimum amount of income to be able to pay the minimum amount of taxes. But sometimes this come and bite you in the behind. So could you tell us how this could work for a self-employed person?
Yeah, so basically that's a good question as well. I have a lot of experience when it comes to self-employed borrowers. What I try to advise the borrowers to do when you know that you're going to be purchasing a home within a year's span time out, I advise you to have a professional like myself look over your tax returns and advise you on how much you need to go ahead and write off and how much you need to show as income on your tax returns to be able to qualify to purchase a home. Because usually, like you stated, a lot of people, they go ahead and they put the minimum amount that they can because they don't want to pay Uncle Sam X by X amount of money in taxes, and that's definitely understandable. But when you're trying to acquire a property, you want to show as much income as you can to be able to go ahead and purchase that home. And what we do is we look at the last 2 years. We look at the last 2 years of income that you derived in, that we average over 2 years to come up with a number to qualify you for purchasing a home. But there are little nicks and bits within that process where you can count, your daily miles that you're using that you file on your tax returns. We can add that back in for income. And then you also have depreciation. So it's something that you want to have a professional look at to be able to advise you on and tell you, if you want to get this amount of home, you need to go ahead and show this amount of income on your tax returns for that year to be able to qualify for it.
What's the minimum a good amount for anybody to qualify? Because I've come across some people that making maybe $25,000 a year. Is that income will be enough to qualify to buy any type of home?
The thing about it is when it comes to income, you have to look at the income and your debt to income ratio. So depending upon how much debt, you might have somebody that has 25,000 that they're making yearly, but they have minimum debt. So when they try to acquire a home, they may be able to go out there and get something for like 130, 140 with that income. You might have some people that are making the same amount of income, but they have too much debt. So their debt to income ratio is too high. So it's really a case by case scenario on the actual client, depending upon how much debt that they have. But again, you have a professional like myself that would be able to look at that information and would be able to determine which direction we need to go in. Do we need to pay some things off? Do we need to add somebody else onto the loan? Those different types of options that we'll have to be able to see, you know, what type of candidate you are. Is it going to be something that we have to put a yearly plan in place to be able to see what we have to do to be able to get there? I'll definitely be able to hold their hand and show them that.
Okay, great. I have another scenario. I met some people, unfortunately, because of COVID, the beginning of March and April, they have been put on a temporary unemployment, right?
Yeah.
So how does that work? Now they're back to work maybe a month or 2 months after. Could they still qualify to buy a house, or they have to wait a whole 12 months of work with no interruption in order for them to be approved?
Yeah, that's a good question as well. In this typical environment that we're in with this COVID, we're running across this a lot. Basically, depending upon how long you were laid off for, we can do an actual gap letter, just explaining the circumstances of the situation. And then once you start working and you start receiving your paycheck stubs, we'll still be able to qualify you to get a home as well. So just because you've been at home for 2 to 3 months without working, that shouldn't deter you once you start working again to be able to move forward to purchase a home.
Okay, great. Let's start talking about credit right now. You know, there's a lot of confusion sometimes around it when people ask me, so I have that much. So they go on Credit Karma and Credit Karma say you have 660. And then you come around, you pull their credit, you're like, nope, you have 602. So could you explain what's the difference? How do you lender pull credit in general? And the difference between Credit Karma or what you guys are doing, FICO score, FICO score, and all of that.
Yeah, and we run across this a lot as well. What I definitely try to explain to the clients is Credit Karma is a third party service. Their job is to get traffic on their website to generate for marketing, to get people to advertise. So they're not professionals when it comes to actually knowing how to score scores. They're going to have all your trade lines on there. They're going to show if there's any fraud going on. So Credit Karma is good for that avenue, but to base it to state that I have a 660, and then when you come to a banking institution, whether you're trying to purchase a car, purchase a home, get a credit card or whatever, we pull it and your credit score is different, and then you're upset because you thought that you were going into this with a higher score. I would just use Credit Karma just to track my trade lines to see how much I'm paying my cards off, if it's reported yet, if there's any fraudulent stuff going on with my credit. I would use Credit Karma for that as well. But when it comes to actually knowing your credit score, you want an actual banking institution to be able to pull your credit from all three bureaus. And then what we do is we use the middle score. Typically, when it comes to credit, what you want to always keep in mind, you always want, if you have revolving credit with your credit cards, you want to keep that at a 10% balance minimum. So depending upon how much credit that they give you, always try to keep your balance at a 10% ratio, because that's going to give you the highest power as far as getting the highest credit score for your scores at that time.
Okay, what's the minimum credit score to qualify for a loan? I know there is a lot of different loan out there. Which one are there and which credit score could work with it?
Okay. So right now with COVID, you know, our credit scores went up with FHA for 640 minimum score for qualification. Now we are starting to see that they're starting to limit that and bring it back down to the 620. So typically for FHA, what you need for a qualifying score is a 620 mid score. We also have a program that's called conventional, which is a traditional program. That's a little bit more strict. With the conventional, you're going to want to have a credit score of at least a 640 or above to be able to qualify for that. We have your VA. We also have your USDA, which are aligned with FHA, and those are our 620 credit scores as well. When you start to get into the investment realm, you want to at least have your credit score to be at least a 680 or above to be able to qualify for that as well.
Okay, so what's a VA loan?
VA loan is a governmental loan. It's offered to our veterans. Basically what it does, it gives a veteran the opportunity to purchase a home with as minimal payment as possible as far as closing costs. You have a 0% down payment. You have no mortgage insurance for the veteran. You do have a funding fee that's added to the loan, but that's amortized over the life of the loan itself. So you really don't feel that payment. And it's a really good program. It gives you the lowest interest rate because of your services, and we do thank y'all for that as well. And those loans are very quick and easy to get done.
Okay, and I heard that sometimes there is something that the seller would have to do to make sure the house will fit some of the criteria for the VA loan. Like,
Yeah.
do you have some of the list, or anybody interested can reach out to you and get the list?
Yeah, anybody that's interested with trying to go VA, they can definitely give me a call and let me know. I mean, the biggest thing when it comes to having a house being eligible to go VA is the termites. They do require that you get a termite inspection done on the property. So typically that's the most biggest thing.
Okay, and then let's say, for example, people like to shop around, right? They want to make sure that they get the best interest rate. So how many times can someone pull his credit without be too much affected by it? And what some of the questions that people needs to be aware of when they're shopping for a loan?
Exactly. So typically, the credit industry, they know that when people are purchasing homes, they're going to be shopping around. That's typical. So what they do, they give you at least within a month, you can get your credit pulled 3 times from 3 different lending agencies, and it only really counts as one ding, meaning one hard pull. You're still going to see the hard pull of the other entities that pulled your credit, but it's only going to count as one as far as having 3 different lending institutions pull your credit. Shopping is suggested. I mean, we do advise for clients to be able to shop around with different lenders. You just want to keep in mind, a lot of lenders hide junk fees within their transactions as well. Here at A&P Lending, we don't charge any junk fees. We don't charge any origination fees. Everything is built into our actual rate. So when I'm pricing you, you have to keep in mind that I'm giving you real-time pricing. You have a lot of lenders out there that like to do bait and switch, where they try to, entice you with a lower interest rate. And then when it's time to go ahead and lock that rate, they switch it, and then they hide fees within different items within the lending institution. So you want to be aware of that and do your homework.
Okay, great. So let's talk about down payment. How long? I met some people, they do have a lot of cash, and they say, yes, I do have a lot of money, and I have $50,000 in cash. Look at here, it's under my pillow. How does that work? I've met client like that, and you're like, oh, hold on, wait a minute, you're supposed to be at the bank.
Yeah, and what I try to advise clients on that as well, I mean, having those assets are good as far as assisting with qualifying to get the home. But you got to think about it. The home is amortized over 30 years. So putting down a big down payment on the home typically is not going to affect the payment of the home that much versus the amount of money that you're going to be putting down. So what I typically advise my clients to do is put 20% down if you're trying to eliminate mortgage insurance, Put the
Okay.
20% down and don't go above that amount. You still want to be able to keep money in the bank as well for rainy days, for emergencies. So you don't want to tie up all that cash and putting that all towards a down payment. Also, for my investors, I advise them to put, 20% down to 25% down. And that assists with them getting the top tier of pricing when it comes to that home. So you want to be able to talk to your lender, have them go ahead and put in, your purchase price minus your down payment, and be able to play with the numbers to see what your monthly mortgage would be, and if it makes sense to put that extra money down.